Hi, thank you for joining us today. We are joined by Mark Bartlett from Strix Plc, who's come along to talk about their half-year results. So, welcome, Mark.
Thank you very much.
Thanks for coming along. Do you want to start off? Obviously, the statement's very positive. You've seen good trading over the last 6 months. Do you want to give us a brief overview of how you think things are going?
Yeah, it's been a very good half year. As you say, the results so far are in line with the full year expectations. A couple of good highlights during the course of the first half. We've continued the automation over in China, put in another 2 automated lines, to now up to 6 total lines in China. Also, we had a very strong and positive reaction to the U9 series of controls that we launched. Actually produced now over 1.1 million controls, and that puts us in very good shape to target particularly the less regulated market, but also protect our shares in regulated and China as well.
Oh, you mentioned the U9 series there, which was recently launched. Do you want to sort of break out for me then the impact you think that would have on the regulated versus the regulated? Where's it going to have more value? I mean,
it has value in all areas, to be honest. So it's quite a modular construction. So in the regulated market, clearly we've got very strong share there, 61% at the moment, but that will allow us to compete for new projects and really just to be able to make sure we've still got the best-in-class controls in that particular region. Probably the most important area for the U9 is the less regulated markets, where we only have a 19% share today. It's a very different structure, a very different cost base, which will allow us to compete much more aggressively with the copyist competition over in the less regulated markets.
So is the U9 going to be the main driver to move you up from that 19% current share to your stated ambition of 35%?
Partly. It'll set us on the way, and it already is setting us on the way. So we've had very good feedback from brands, particularly in places like Russia. We already are continuing to evolve that template. So you will see other controls come out that help us even further. But certainly it's the stepping stone to increase that growth.
And the rest of the growth comes from tighter checks in Chile, or?
Certainly that's been a benefit for us. I mean, they have changed the regulation in Chile, and obviously we had some very good results over there 4 or 5 years ago. Even now they're stepping up the regulation, which will make it even harder for the copyist players in those territories. So that will certainly help us with the U92, which is that particular control, or even some of the legacy products as well.
China, obviously you've seen a nice reversal in the growth of revenue there. How much have you had to sort of flex your legal muscles there to defend off the copyists?
We've had a very good case in the first half of the year, which was particularly for the multi-cookers, as we call them. So they're like kettles, but they're used for all types of different cooking, whether that be sort of teas, spaghettis, all sorts of soups. And they were actually in breach of our IP. So we took a case against 19 different appliances. We won that and actually settled out of court in the end. There's a couple of other actions pending at the moment. But that will put us in a very, very strong position to gain some of that share going forward. Some of it has has the potential to substitute kettles. So obviously very important that we protect that share.
Yeah, no, massively. Okay, well, let's go on to the big regulated market. Obviously the US is a huge part of that growth going forward, whilst obviously the UK continues to support that. We saw a very nice opportunity coming through on the press release back in August for hot water on demand and coffee in that instance. But could you talk us through the growth opportunities there?
Yeah, America itself is an interesting market because today there's only around 15% penetration, so household penetration that is. So a very good growth opportunity. Today Strix has more than 70% share of that market, so clearly well positioned. A couple of things going on in the US at the moment. Certainly there's been a change of the drinking habits and much more awareness of the health benefits of tea. That's certainly helping sales of kettles as people sort of realise the efficiencies of the electric kettle. And then also we've had some good collaborations with various brands in the US and in other areas in fact as well, where brands are looking for some slightly different technology, which is one of our sort of expertise, to be able to make sure they can produce water at the right temperatures and at the right volumes to produce sort of the perfect drinks, whether it be coffee or teas.
The US consumer signed deal back in August. We got to see the opportunity to see further of those coming through. Are there others bubbling away in the pipeline?
There are. I mean, not specifically for the same part, but yeah, clearly that was done with a specific brand. But yeah, with the hot water on demand category, there's a number of areas we're looking at, and they will encompass both coffee and tea opportunities in the future.
Mm-hmm. And are these US specific brands, or are you seeing brands that you're currently working with in other territories taking you and helping drive that growth in the US?
In fact, it's with existing brands where we've got very strong relationships already, and we are seeing that from a number of brands, not just from the US.
Excellent. Aqua Optima, that's been fantastic. You've had that sort of breadth and depth of revenue base to draw upon, and it's been a great driver over the last 6 months. Talk us a little bit about where that growth's come from.
Yeah, it had a very strong first half year for Aqua Optima. I mean, the team has been strengthened since we listed, making very good headroads into the UK market in particular. Very strong results with the retail segment in that market. So today we're at just over 20% share of the UK market, and we do see continuation of that growth going forward. Back end of this year, we'll also be looking at growth into China. We'll be launching the Aqua Optima with some additional products as well into the China market, which is another significant growth opportunity for that product line.
What about the US?
Much tougher in the US. So at the moment, that's certainly not on our radar. Who's to say for the future? Okay,
and obviously the pace of growth has been fantastic. Is that something that can be maintained? Is China going to help keep that up?
Certainly. I mean, we would still expect to see further growth in the UK from that 20% share base, based on the relationships that we built up. And China is a very significant opportunity. So certainly we would expect similar growth rates going forward.
Fantastic. So moving on from Aqua Optima, so that's providing a nice opportunity for growth, which is sitting alongside that hot water on demand. At the moment, they only account for 10%, with kettles delivering the other 90% of the revenues. What are your ambitions for that split going forward, and what can we expect to see?
Yes, since we listed, we've put a lot more focus on that other part of the business, done some consumer research, particularly in the hot water on demand segment. So going forward, I'd expect that ratio to change closer to a 25%, 75% over the next 3 to 5 years.
3 to 5, excellent. Well, we look forward to looking out for that. Raudres, thank you for joining us.
Thank you.
Can we start off then with your brief take on the numbers and EBITDA?
Yeah, our adjusted EBITDA increased by 4.3%, where we reported at 14.8 million for the 6 months, and that is in line with our growth expectations. And our net cash from operations continue to be very strong, where we have a cash conversion ratio for over 90%. And therefore our net debt has decreased to 37.9 million, which is from last year end of 45.9 million, which is a big 17% decrease.
Well, that's fantastic. I mean, the strong cash generation continues. You've obviously touched on debt there, but there's also obviously investment for growth and dividends, which all investors, I'm sure, will be interested to hear a little bit more about your plans for. So could you perhaps break down between those three, further ambitions on debt reduction, a bit more detail around the dividend and your investment plans?
Yeah, well, our priority, of course, is to increase the shareholders' value. And with any excess cash we got, or actually any good investment opportunity, that would be our priority within the next few years. And that, of course, depends on case by case. And apart from that, if we have excess cash, the first thing we would do is definitely try to maximize our opportunity to pay off the debts, to reduce interest. We have a fairly flexible facility line which we can pay off and draw down on fairly flexible terms. So we definitely will leverage on that and therefore reduce interest. And in terms of dividends, we have our progressive dividend policy where this year we're going to pay 7p per share. Next year, 2019, is going to be 7.7p. And then beyond 2019, the dividend policy will be on progressive, where it will be on a growth of earnings per share basis. And so from 7.7p onward from 2019, it will be aligned to the earnings per share growth.
Okay. Obviously, I picked up in the statement that there was a brief mention about possible excess returns, but this will be dealt with on a case-by-case basis.
Yes.
If special dividends become relevant.
Exactly.
Yeah. Well, we'll leave that to Mark to drive the growth to deliver on those ones. So in terms of further investment as well, what about factories in China? Are there going to be investments in that area?
Yeah, well, in terms of our factory, right now, our factory lease is going to expire in a few years' time, and we will be running out of capacity very soon. So in order to continue to maximize opportunities, increase efficiency, we do need to look into the factory move. So it could be a buy or it could be a rent option. We are definitely evaluating that right now. So apart from that, increased automation and increased capacity continue to be a priority, which is part of the CapEx investment that we're looking at.
Okay, thank you. Cost of sales, you've done an excellent job of keeping that reasonably flat. Has all the low-hanging fruit been had? Can we expect to see, so you can't continue to drive growth continually and hold that at the same level, but what further savings can we expect, or are we going to see it slowly start creeping back up now?
Well, low-hanging fruits, I think this is a culture of the company that we continue to develop and nurture low-hanging fruits. The culture of the company is that we continue to look for opportunities to save costs, lean manufacturing and so on, to continue to drive down manufacturing costs and increase productivity and efficiency. So I wouldn't say we exhausted the low-hanging fruits, because every year we find new opportunities to capture where we continue to drive costs down. Excellent.
Finally, I realise it's a little bit of a generic question. We don't have a crystal ball, but how are you feeling you're positioned if Brexit, we get a no deal or a checkers deal? How does the business consider itself positioned?
Well, all our components are sold to the OEMs, which they are all located in China. Majority of them are in China, and then they produce the kettles where they sell all over the world. So Brexit doesn't have such a direct impact on us.
And currency you're comfortable with?
Our functional currency are in pounds, and so is our debts, as you know, and with dividends it's in pounds as well. So the majority of our revenue are received in pounds as well. So if you look at it this way, we have quite a natural hedge that goes along carry all the way to EBITDA.
Excellent. Thank you very much, Raudres. So, Mark, in conclusion then, see the business is working hard to build up that breadth and depth and resilience in the revenue base now that you've come out of private equity and you've got the opportunity to move from an income-based business to a growth business. What can we look forward to seeing over the next 6 to 12 months and looking forward to the opportunities for further growth?
Yeah, a number of things we're working on at the moment in the core business. We'll continue to evolve the controls that we've got, as we mentioned earlier. So certainly you'll see us being far more aggressive, particularly in places like the less regulated markets, to increase that product share. In the other segments, in terms of the new product developments, certainly a lot of work being done on the hot water on demand. As we mentioned, there's some collaborations going on with brands, and certainly in the next 6 to 12 months, we'll start to see some of the fruition of that development work coming into the marketplace. And then for Aqua Optima, certainly the launch into China is going to be a major push, as well as a few new products coming out at the beginning of next year as well.
You're going to be busy.
Very busy.
Well, we look forward to hearing an update in 6 months' time.
Thanks very much.
Thank you.